The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin.
And I got Lou from Fairfield, Connecticut, man. How you doing, Lou?
I'm doing good, Darrell. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. Let's check out where things are right now. We got the S&P is flying. It is flying on up 13 points right now. Started off a little slow, and then just decided to go, all right? We got Russell up 21 points right now. We got the NASDAQ up 33 points on the day. So just a lot of movement. We got Dow's up 108 points right now. So a lot of movement on the day. It's, one of those, ECB days. So whenever they have their press conferences and things, just sort of rocket on up. Let's see here. But yeah, so taking off and moving on up, and just not much more to say than that. But we had some trades work out really well, and I want to go over some of those things about the news trades and lay out that, to sort of do a review for you. This is sort of one of my favorite, probably if not my favorite combination of news, when we get the pound and the euro all together on the same day, which is most of the time we get both of those interest rates with the press conference at once. We also got copper. Copper is down about 0.2%. We got gold is up 8 points right now. We got silver up 1.4% on the day. Natural gas up over 1%. Oil right now is just down 33 cents. We got corn down 6 points, and that's over a 1% move. We got soybeans down 18 points. Euro dollar is currently up 0.0031, so 31 pips. We got the Aussie dollar at 47. We got the pound dollar at 67. Finally getting some FX volatility. And dollar frag down 40 pips. Dollar CAD basically flat on the day. It's down a pip right now. We got the dollar yen down 21. We have the Aussie yen is up 34. The euro yen is up 11. Pound yen is up 38. And euro pound is down 14 pips on the day at the moment. And so that gets you caught up on where everything is. And I wanted to go over this. I had a trader give me an example. I hope I still have that. I was working on some of this stuff this morning. And I don't know if I still have the stats from that conversation, but that's okay. All right. What I wanted to do is go over with you the whole idea when I talk about straddles and strangles and all that, and just clear up any confusion. And I've talked about them before, and I've went through these, misconceptions and these confusions before. But they're the things that sort of consistently come up as people are reintroduced. They obviously haven't caught up on all the archives and everything else. And it's something that you just you really got to get this down, okay, in order to be able to be successful at doing the trades. And so what is it that I'm talking about? What is it that's so important that so many traders mess up on when they do these news trades? Because they're not really that hard. It's just if you don't, I guess like anything, if you don't get it, it can make it obviously everything difficult. And that is understanding really how the profit and loss works on both the iron condors and the spreads. So if I put iron condors here and I put straddles on the spread, so both of these are spread trades, okay? And I'm just going to make up some numbers just to get the concept down. So let's say I have a buy and a sell, okay? And I have a buy and a sell. And then we'll say this will be the floor column. This will be the ceiling column right here. Okay. And then we'll say, let me shrink that out of the way. This will be our, entry price. And then while we're at it, we'll go ahead and put up here, current market price. So let's say just whatever it is, we'll call it, XYZ instrument, okay? And we'll just, we'll make it sort of like a Forex pair. We'll put 1.0020, okay? And so with that, we'll go in here now and add on the extra pip so you can see it. And let me add that on. Get that pip in there. There we go. All right, so we got the extra pip in there. So let's say the floor is 1 point. Now the iron condor is going to be a little bit inverted. So actually the ceiling on an iron condor, we'll do a straddle first. Everybody gets those, and then we'll come to the iron condors, because I think that's, especially when they look at straddles, because everybody likes the straddles, but they don't understand that the condors are better. But we'll start with straddles because that's a lot easier to comprehend for most people. So we'll say the floor of the spread is 1.0020. And I thought I had expanded the zeros on there. It just doesn't want to seem to do it unless I'm specific. Let's see here. Try that. There we go. Okay. And we'll say the sell side here, so the ceiling will be 1.0020. And then we'll say it goes up to 1.0120. Or we'll say 0220. Here we go. I guess most of them are 100 pips wide, like today they're 100 pips wide. So do 0120. And then we'll bring this down. That'll be... that's going to make it. I'm going to try to, basically whenever I try to do these examples, I try to figure out how to make them like as easy as possible. So I'm going to change that up. All right, so we're going to make this 1.010, and then we'll make this 1.0100, and then we'll go over here, we'll make this 1.00. And then we'll make this ceiling is going to be 1.0100. We'll go over here, we'll raise this one up to 100 pips. And we'll drop this down. There we go. Okay. So that's our floor and that's our ceiling. And you could sort of picture this as, you can make money in this range or this range if it moves up or down. So we got this entry price. So let's say the entry price on it is 1.0130. And let's say the entry price here, so when I buy it, and like the market's like it's right there, it's right at the floor of the bought one and the ceiling of the sold one, is 1.0, let's see, we'll make it 30 pips below, so 070, there we go. Alright, so what is my risk? On each side, let's take this minus this, 330 pips. And then my risk on this one, I'll go ahead and take the ceiling minus the price of 30 pips. So put a sum right there. All right, so we got 60 pips of risk, and move this down a little bit further, and then we'll just take that and multiply it times. There we go. So we got $60, so in dollars. And so that tells me what my risk is on the trade if I do the straddle. Okay? So first, what is my break-even price? Okay? And then we'll say, what is my 1-to-1 profit target? All right, so let's look at that. My break-even price on this, the way you figure it out, is if the top one lost $30, if one of them lost, we had total loss, the other one made money. So it's actually pretty simple. We go in and go, well, if I bought it at 1.0130, and the risk is $30 on the sell side, so let's say it went up, it'd be 1.060, because that means that when I bought made 30 pips, when I sold lost 30 pips. If I go over here and I go, okay, well, I sold this one, and then let's say that one, so the sold one, say it dropped down, the bought one lost 30 pips. So what I want you to see right now, this is probably one of the most important things. So huge, okay? It has to move, not 30 pips, not 60 pips, whatever, or not, it has to move 60, but the market has to move 60 pips from where it is. And sometimes people look at this and they're like, that's only a 30 pip move. No, it's a 30 pip move for the spread. But for that spread to make 30 pips, that's a 60 pip move, at least as of expiration, in the underlying market. Okay? So right there, I mean that's so massive. Having to get that, like that's a 60 pip move. Okay, so if I go over, and let's move this out one more. So move required by underlying, just to really stress it here. Okay, so we have that minus price of 60 pips up, or 60 down, I guess we could say, right there. All right, so there's a 60 pip up move or a 60 pip down move. Move required by the underlying to be break even. Okay? Well, okay, if that's the case, how far does it have to move for me to have a 1-to-1 take profit? So stay right there. We'll be back, and I'll show you. It's like, well, that looks horrible. Well, it is in this case. And I'll show you how to not only understand this, but how to make money on it being horrible. All right, stay there. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we'll come back here to the Diagnostic Trading Hour. And all right, so we're going through and we're looking at this. We understand we got floor, we got sell, we got entry price, we got risk, we got break-even price. How far it's going to have to move. This is so huge that you understand this, okay? And then we got to the one-to-one profit target. And this is another big piece. So one, understand, if you did this straddle, you're expecting the market to move 60 pips, okay? So, and I can even make it more realistic. From the trader I did today, that they had basically about a 70-tick risk. So if we went over there and just went in and added like 5 ticks on here, subtracted 5 from here, that's actually the trade they were doing today, okay? And I'll show you why that was a bad trade. And not trying to dog anybody or say anything negative, but just you want to know so that way next time you can make money or stay out. So one-to-one profit target. Well, to make a one-to-one, I got to look at my total risk. What's my total risk in the trade? $70. Okay? So I want to walk away with $70 more than I started with to make one-to-one. And not worrying about fees, just keeping things really simple. Because, I mean, to me, like, worrying about fees and you go to that one-to-one profit target and you miss it by a couple dollars because you're trying to get the last $2 in fees, and then all of a sudden you made 70, but you didn't make 72 to cover your $2 in fees, and the thing flies back down. And you end up losing not only the $70 in profit, maybe you end up losing $70. That's not a good thing. So I don't let fees determine my trading. I let what makes sense determine my trading. My exit should not be determined by fees. It should be determined by where I expect the market to go. And if the fee structure doesn't work for my trade, then either I need to find another trade or find another fee structure. But I don't need to change my trade to fit my fee structure. All right, so one-to-one profit target. If I got 70 pips of risk over here, and looking at that, I go, okay, I need to make $70, but I need to expect to lose $35 on the other side. So here's what I need to do. I got to take my entry price, and I need to make, okay, what? I want to profit $70, right? 70 pips. But if I just take it off 70 pips higher than where I bought it, I'm still going to lose $35 on the sold side. So I also need to make that. So it needs to go to 1.0240. Well, there is a problem. One is the spread isn't wide enough. Okay? For that trade to even work. But let's go in and let's just make it a wider spread. I guess we could do that just for example purposes. We'll make it 150 pips wide. And not that I have to, I don't want that to be part of the issue. All right? Which is going to make me change like every number on here. So let's go on and let's just make this 1.0200. 1.0200. There we go. 1.0200. And then we'll add 150 pips, 1.0350. And then we'll subtract 150 pips, 1.0050. And then we'll go over here and we'll add 35 pips, 1.0235. And we'll subtract 35 pips, 1.0165. Okay. Same place. Now at least my 1-to-1 profit target's within inside the range of the bid-ask spread, 150 pip wide spread. And let's also go in and go, what about on the other side? Well, on the other side, I need to take the price that I sold at. I need to make 70 pips, and I also need to cover the risk on my bought side. Oh, I didn't use the pip one there. And we'll have to reformat that because it went into dollars. There we go. So now it's got to drop down to 1.060. How far does it have to move for me to make my 1-to-1 target? So move required for 1-to-1. Move required for break even. Okay. And so with that, I'm going to go, okay, well, if that's my move required for 1-to-1, that's my move required for break even. How many pips is that? So, well, my profit target less the instrument I'm getting in on, and vice versa. Okay, so we'll be right back after this. There and there.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right. Welcome back here to the Diagnostic Trading Hour. All right, so we got straddles over here, okay? And so we're buying this spread, we're selling this spread right up here on top. And we realize, and here's the problem I want you to understand. What if the expected movement is about 70 pips, maybe 75 pips? Understand that expected movement, when I say I expect it to move this far, that's not that I expect it to move that far and stay there. I expect it to move that far and pull back. Therefore, if I'm doing a straddle, that means I expect to get in, take profit, get out of the trade. Okay? So, I need to do the math to figure out what is the break-even price? What is the one-to-one profit target? Is that a realistic expected move? Because in this case, it's not. Basically, I expect to be break-even pretty much at the point where it's going to stop and turn back around if my movement is 70 pips. So, you could go over here and maybe we'll put in a movement expectation. Okay? Right there. Get rid of the bold on that. Put some input fields here. So we got some movement expectation. And yeah, you'll have to enter your floor and your ceiling. You have to put in your, entry price. And which your entry price is going to be the bid on sold and offer on bought. Okay. So you'll have to enter that in. And then let's see if it can do, I think I can do the rest of the math for you. Okay. And so this would be your profit target, the take profit price. Okay. And that's your move required. And you want to go, is that even a realistic expectation for the day? If not, then we got a problem. Now let's go over here. I'm just going to copy this to make it easy. I'm sure I'm going to have to change some stuff up. And we'll put iron condors here. And we're going to flip things around a little bit. Okay, we're going to do that. And we're going to buy. Okay, so now what I'm going to do is I'm just going to make this really simple. And there might even be a better way I can do this. What I could do is add in, because I'm actually building this to make it an online calculator. So we'll put floor, ceiling, we're going to put bid and offer. And spread 1 and spread 2. Let's do it like that. Okay, or upper spread, lower spread. That'll be even better. Upper spread, lower spread. And what that'll do for us now is we can, okay, here's our floor, here's our ceiling, here's our floor, and here's our ceiling. We'll do it like that. There we go. So then all my formulas will go with it. And right over here, there we go. We'll put our bid. See right there, that's going to be an offer on the bought one at least. This will be a bid on the sold one. Okay. And then bid on this. I'm going to go ahead and put the put that there. I'm going to put this here so it'll carry everything with it. Thought I put that there. Try it again. Alright, so my bid, let's just say it's 1.02, we'll just say 3.0. And 1.0170. Alright, so that's starting to get rid of some fields that we don't have to worry about. A little cleaner. Okay, so now let's move that over here. Move this right here. Made one too many spreadsheets. And then we'll move all this left. Okay, sweet. Alright. Basically what I'm trying to do is eliminate having to re-enter information over and over and over again. And then we'll put in to say the movement expectation is 70 pips. Alright. So now let's get this working out. So if I got my iron condor here and I go, what's my risk on the trade? Well, it's a little bit different. On the one I bought, okay, which is going to be the lower spread. Okay, so right here, lower spread, I3, so I'm going to do that one, and then minus the, this one's actually a little bit different. We're going to, instead of doing risk, because risk is what we're concerned about on a, and I know we're concerned about risk on everything, but max risk is what we're concerned about on a straddle. But minimum profit is what we're concerned about on a iron condor. Okay? And it's just basically, it's just a qualifier. It doesn't mean you don't obviously take into account risk. It's just if the profit isn't there, you don't have the trade. On a straddle, if the risk is too high, you don't have a trade. So, because one of them is premium collection, one of them is for breakout. So, minimum profit. So, we got the minimum profit right here. What is that going to be? Well, it's going to be the ceiling of the lower spread minus the offer paid. Okay? And then it will be on the sell side, it will be the bid, so go to the upper one, minus the floor. So I can make $60 on the trade. Now, what is my break even going to be? It's going to be a little bit different. Okay, so on my bot spread, okay, so I'll go here and I'll put lower spread. And then sell is the upper spread. Whereas up here I'm buying the upper spread and I'm selling the lower spread. Okay? So my break even on this trade is going to be what? Profit, buy lower spread. I'll break even if I make 30 ticks on the sold one. So if it goes down, basically 30 pips below where I bought it. If I lose 30 pips on the bought one, I make 30 pips on the one I sold. So I go, okay, well, what price did I buy at? And then I just subtract my maximum profit potential, okay, from the sold one. And so I'll be break even down at 1.0205. And then, what about the sold one? Well, if it flies up, I'll make 30 pips. So what I do is I go, well, what price did I sell the upper spread for? I may have done that wrong. Let's go over here one more time. Okay, I bought the lower spread, and if it goes down 30 pips below, okay, there we go. Yeah, it's a little bit lower than I thought it was, which is good. And then, okay, so on the sold spread, if it goes up, so if I sold it, I sold the upper spread, and then, but I'll be hedged up to $30 on the bot spread. Okay? And what that does is movement range, we'll just put movement pips up, down, break even / profitable. Okay, so like if it's inside the range. And so I go, okay, well, what is that 1.01? I go, okay, well, if the bot spread, it could actually, what could it do? It could move down where the market is down to 1.0140. So it drops 60 pips. Right there. So I guess that actually should be this number, that number, and then right here, go right here, and this will be, it could go up 60 pips, and I'd still be break even. Now, check this out. What this is showing you, okay, is if I went in and did this trade the exact way I'm laying out to you, that gives me a 120 pip wide range where it could be break even. This right there gives me a 140 pip range before I'm break even. 70 up, 70 down. So that's why I talk about this whole like break even thing being so massive. Anything less than this, okay, and I'm profitable. So I don't even have so much the move required for 1-to-1. I mean, I'm going to get 1-to-1 if it expires like at the floor of the ceiling. What I do have is I have, what is my 1-to-1 risk level? Remember how like we sort of inverted it? The other one was all about risk. This one, it's all about profit, and we start with risk and we end with profit. On this one, we start with profit and end with risk. So 1-to-1 risk, say, it's not even target, because it's not a target, but price move required to lose 1-to-1. Okay? And so we'll go over here and we'll go, well, what is that? That's going to be, how much can I make? I can make 60 pips. So if I went in and I bought this spread for 1.0170, bought the lower spread, and I can make, I have to lose 60 pips. So minus 60, 1.0100. And then if I sold this spread, and I sold the upper spread for 1.0230, and I'd have to lose 60 pips, 1.0290. So move required for it to get down there, the market would have to drop 90 pips, or it would have to increase by 90 pips. So let's go over here and go, drop this down a level and say, okay, so what is my range? I guess that you could say that's sum. It's like right here. So this is going to be this plus this. Yeah, it's going to be equals this minus this. There we go. So I got 120 pip range right there. Look at that. Right? For break even. Okay? If it ends anywhere between 120 pips, 60 pips up, 60 pips down, every dollar above or below that, I make $1. Okay? And it'd have to move up to 180 pips, range. I have 180 pip range before I'm at a 1-to-1 loss. 90 pips up, 90 pips down. So, do you want that? Or do you want to go over here to the opposite? And you got 140 pip range required to be break even, and 280 pip range. I mean, that just is insane. 140 pips up, 140 pips down before you're actually going to be at 1-to-1. So you start to see, like, when you look at this, you're like, wow, okay, so it has to move a lot further for me to make 1-to-1. It has to move really far for me just to be at break even. And when I look at this last piece, I'm like, I only expect it to move 70 pips. If it moves 70, okay, I'm down $10, but I expect it to pull back in. And you start realizing why iron condors make a lot more sense. All right, stay there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. We just got a few minutes left, and I want to wrap up the NFP plan for you for tomorrow, okay? So you're ready on that one. And give me 1 second while I load all that up. What is that? That's some sort of advertisement, I guess. Where did that come from? Yeah, there we go. Okay, so bring that on back up there. Show you the report. And zoom in a little bit. Okay, so we're looking at NFP, we're looking at unemployment rate. And we got stuff going on a couple different counts here. One of them is going to be on, oh, come on, load up. There we go. Okay. So, NFP, non-farm payroll change, and sort of what to expect on it for tomorrow. And I'm going to go into pound dollar, I'm going to go into euro dollar, and also go into dollar CAD. Let me hit dollar CAD first because we got dollar CAD employment and U.S. employment at the same time. Okay? I'm looking, and I'm going to read off basically looking at the 10 a.m. and the 3 p.m. So when I say 65, I'm saying like 10 a.m., 3 p.m., same thing. All right? So, all right. So we got 65 pips. Last report support after that. By the way, we hit pretty much like 90% of that, like in the first 5 minutes. Dollar CAD, we got 56 pips, and it didn't matter if you waited till the end of the day or not. Looking on over, checking out 80 pips. Okay, and again, it got up to about 110, came back down to 90 by the end of the day, but pretty much almost all that happened in the first 5 minutes. We got 83 pips, okay, the trade before that, and 70 pips, and then we got, what do we got here? Ran up about 57 pips by 10 a.m., and that was the peak. And then trade after that, we got about 46. Got started lightening up. It was like 27. Okay, then it bumped back up to 55, 89, 65. Okay? So I would say you need to look for probably an average of expect about 60 plus pips in movement on the trade. Just running through the numbers real quick. Like I said, you got 65. You got some that are bigger, 95, but you also have a couple that are smaller. You got several 80s in there, but a lot of 60s. And just a couple that are small. So I'd be looking for about 60 pips on the trade. Obviously, you need to be looking at the deviation levels. So if it hits a deviation level, and that's, let's say, at 54, okay, and then you're going for 60, don't be greedy. Don't be stupid, okay? Make sure that you take profits right before that level. Because it will get you. It'll bite you. And, all right, so 60 pips is our movement expectation from release to high, release to low. Doesn't really matter if you get into an hour before it's 7. It doesn't really do much of anything. Okay. That same movement expectation is what I would expect to the end of the day, with a few exceptions where it may move like another 20 or 30. But a majority of the time, not really expecting more than 60 pips. So what does that tell me? That tells me that if I can get more than 60 pips for a 3 p.m., especially if I get like 70 or 80. That could be a good trade, a really good trade. But what about for a straddle? Well, I need to be able to take profit at close to a 1-to-1 with a 60-pip move. So you're probably looking at somewhere around $35, okay, on that trade. And that's all we got time for now. If you want to know the stats, go back and listen to the last time NFP came out. I went over it right before that. But that'll cover dollar CAD for you. Y'all have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.